we have the Axis Bank numbers. They should just be hitting us anytime now. I'm just quickly going to open it. 726 crores on the net profit. So that's a shade better than what we were expecting. It should be a growth of roughly about 25% in terms of the asset quality. Okay, I have the gross NPA is 5.28%. The net NPA I'm in at 2.56%. So in terms of the gross NPA, it has come down from the nearly 6% that they had last quarter. Net NPA 2.56 is a definite improvement over 3% that they had done last time around. In terms of absolute numbers, the gross NPA has come in at 25,000 crores and the net NPA has come in at 11,770 odd crores. So on both accounts, I think it's definitely improvement. Yes,
the NII growth is higher than our poll. So the NII is at 4,731 crores. That is up about 9.2% on a YOY basis and about 4.2% on a sequential basis.
I think what Sumera read could be a little more important. Do you think 25,000 crore is actually a fall in GNPA? Last quarter they did 27,000 crores, 27,400. So 25,000 odd crore that Sumera is reading out is actually a damn good number.
2,000 crore reduction in gross NPA.
Yeah. So obviously either that must be JSPL also. Yeah. I mean, clearly that has been upgraded. So that was straight away coming. But the point is the incremental generation has not been bad. Loan growth at 21%. Now everybody is going to report very good loan growth numbers because last year same time they were not giving loans at all. They were only exchanging notes. So
okay, slippages are at 4,428 crore. So if you look at that, that is versus 8,936 crore. The
slippages are about 50%.
Yeah, it's half of it. Correct.
So it's half of it. 4,428 versus 8,936 crore on a sequential basis.
Let's make it easy. It is almost 9,000 crore last time, 8,900. Yeah. So versus 9,000 crore, it's come down to 4,000 something. So it's half of what they did in the second. See, anyway, this quarter is great for Axis because the big problem of RBI divergence is behind them. They audited and announced already, and so it was always that positive that was going for Axis. It was a tailwind for them, something which SBI and ICICI won't have because the audit report was not out when they announced the Q2 numbers. So this looks like a growth story also. Sorry, now if you can tell us about the NII as well.
The NII has grown by 9.2% on a YOY basis, while on a sequential basis, the NII has grown at 4.23%, while credit cost on an annualized basis has fallen. So that has fallen to about 2.33% versus 3.16%. So on a sequential basis, that is Q on Q. But on a YOY basis also, the credit cost has fallen. So 2.33 actually compares to about 3.61. Provision coverage ratio has improved. So that has improved to 66% versus 60% earlier. So what must have happened is that when your gross NPA actually fallen, they must have kept the provision in line, and that has actually strengthened the provision coverage ratio.
Oh, absolutely. I think I saw the margin number also passed, but I missed it.
There's recoveries and upgrades number, 4,800 crores.
Yeah, I would assume about half of that is also JSPL.
They have clarified. They've said that the bank has recovered substantial amount in cash from an ITES account.
Oh, that's
and
Aegis.
Upgraded one account in the steel sector, both of which were amongst the 9 which were reclassified.
Yeah, the Aegis BPO and JSPL were two accounts which they were shocked when RBI asked for a reclassification and called it a divergence from their views. Now clearly both have been reversed. One has paid back and the other one has been recognized as standard because it had 4 quarters of regular repayments. We saw HDFC Bank also classify it as standard. So both those are reflecting in Axis's numbers. Actually, so much of this is on expected lines because we knew this story.
The only thing, which has not been declared as of now is, out of this 4,428 crore, how much is from watch list and how much is non-watch list? That number is actually missing in the presentation. Otherwise, they always had a slide on what is the movement in terms of total watch list. That is missing right now.
Okay, I guess we will be able to hear about that in the press conference. There is a conference call at 3:30 and a press conference later at 4:15. So we should be able to get that. Loans under watch list 12%. I guess some of it would also have become NPAs.
We shouldn't overlap this. This is an overlap wherein double B and below is about 16,120 crores, out of which 5,309 crore is under watch list, but it is not funded and non-funded watch list put together. So it is not that the total amount of watch list is 5,309 crore. They have mentioned that double B and below book. How much is that, and out of that how much is watch list? But we don't have a clarity whether that is funded and non-funded together or only on the funded side.
Okay, Manish Oswal of Nirmal Bang Securities also joins in. Hi Manish, your first take on the numbers looking good.
Yeah, Axis Bank reported very strong set of numbers, especially on the asset quality side. If you look at the last 8 quarters, the gross NPA continuously increasing. This is the first quarter. This is a reversal in the gross NPA in terms of absolute basis, number one. Number two, in terms of core operating performance, NI, net interest income and the non-interest income both have been very strong in this quarter, despite of the difficult environment. So very strong set of numbers, operating performance plus asset quality side.
Okay, there are total loans against IBC accounts have also declined, which means they must have sold off some of their loans outstanding against IBC accounts at 6,000 crores as on December 31st. Do stay on, Manish. We also have other guests joining us. Mayuresh, your thoughts on the numbers? The stock has risen about 4% after the results came in.
Afternoon, Lata. Yes, I think impressive set of numbers, specifically in terms of asset quality, because there our own expectations were a kind of a flattish trend. But obviously, I think with a couple of upgrades that have been expected by the street, yes, that large portion getting recognized has given a positive impetus in terms of the absolute number. The second element in terms of margins, they were expected to stay flat because they have been following the shift to MCLR. And again, the competition with the refinance markets were expected to keep that around those levels. But credit costs, again, I think because of a large recognition that has happened, because again, the competition with the refinance markets were expected to keep that around those levels. But credit costs, again, I think because of a large recognition that has happened, because slippages, as Abhishek was also pointing out, I think that's one important component to be seen of what has actually come from the funded and the non-funded list. But prima facie, I think good set of numbers.
Yeah. Well, the only point I want to put as a caveat on the table is this is the FY17 inspection is over and we know what has happened. But, inspections remain a problem for banks, and until we finally hear the divergences going away, this is good news till perhaps the next second quarter. Then once again, the markets will start worrying about whether, there was today somebody even talking about a third AQR, I mean, completely unconfirmed. It was just a comment from a market guest. But there are those other ambushes lying. The limited point at the moment, the numbers are clearly much better than what the street was expecting. Still slippage is halving and gross NPLs at an aggregate level falling, and therefore total GNPAs as a percentage of total assets also declining markedly. We have more guests joining us.
Yeah, Krishnan ASV of SBI Caps is now with us. Hi Krishnan, you've had time to go through the numbers now. How's it stacking up against your own expectations?
Yeah, many thanks. So very clearly, as your other guests have been saying as well, the asset quality has been impressive this quarter, especially compared to the shocker that we had in the September quarter numbers. I think roughly about 2,200 odd crores were anyways expected to reverse from the non-performing asset. There was one steel asset, as the discussion earlier had indicated. There was one IT account as well. So I think roughly about 2,200 odd crores would have been upgraded just on those two counts. Yeah. So yeah, I mean, at some stage, I think the narrative on Axis Bank will need to shift towards operational performance. Our own expectation was that will happen by the fag end of the year, to the extent that Q3 numbers have been as impressive as they are on asset quality. I think the narrative will probably shift earlier.
Yeah, but narrative, don't you think that has already shifted to growth? I mean, fee income has grown reasonably well, and net interest income is almost double digits. It's getting there, if you take 9 months, that is. And margins as well, improving a tad, 3.5%.
Yeah, so what I meant, Lata, by narrative was the fact that, there is distraction from asset quality, every alternate quarter here.
Yes.
To that extent, does one quarter of, very impressive asset quality, does it lay to rest whatever issues or whatever uncertainties there are around asset quality? That's probably what I'm thinking.
Okay. So you would worry that come FY19, you will have the FY18 inspection and RBI could pull up more problems. Does that worry still bedevil the stock and its pricing?
From the valuations of Axis Bank, it doesn't seem like that's a worry for investors and analysts, right? But could banks, including Axis Bank, for instance, could they face some, cascading effects of the next, risk-based supervision cycle that comes through? I think every bank is trying to learn the ropes there. So there's a learning curve involved for every bank. I think banks have got consultants now who are ex-regulators. So I think banks are also trying to, understand what the Reserve Bank of India really wants them to do in terms of risk-based supervision. Yeah.
Okay. I don't know how much you could read of the presentation, but Abhishek was pointing out that they have not announced the non-watch list slippages.
Correct.
Okay. Is that a worry at all for you, Krishnan?
So mix of slippages is, nice to know, but I think from what you indicated earlier, the double P and below has gone from around 15,000 odd crores to 16,000 crores. So there has been a slight uptick there. I wouldn't worry too much about, just the trivialities there. I think what really matters now is whether you're able to put this, elevated level of slippages behind and more than dissolution of watch list, I think you're looking at resolution of watch list. So I think that's probably where the focus should be. Yeah.
Okay. Well, just other points that we need to point out. Balance sheet grows by 11%. The bank advances grew by 21% as on 31st, but that's obviously a base effect as well. And loans have grown 29% and now account for 46% of the net advances. Mayuresh, what would your price target be now?
So we're very close, Lata, to our price target. But again, I think the large element in terms of what you've put out, it is holding true for Axis Bank. So they're trying to de-risk their lending book because the corporate exposure, which is now remaining, I think, incrementally is going towards A-rated and above. So I think the SME exposure towards working capital, the incremental corporate lending is largely getting driven by working capital needs. To that bit, I think the safeguarding effect of incremental corporate lending is on the cards for Axis Bank. The retail growth has been very, very impressive. And even if you look at the cost of borrow structure, that's coming down quarter after quarter. So again, I think NIM should be maintained around these levels. Credit costs should...
No, I wanted to ask you your price. See, I don't know if anybody in the street was expecting a 60 basis point fall in GNPA and net NPA. Both gross and net NPA has fallen by about 60 basis points. Is that in the price, Mayuresh, or do you think the stock will be priced higher?
No, so I think to a large element, I think the progress on the balance sheet was expected. So we are very close to our price target itself. But let's have a look at the management con call, and if they're projecting a far better FY18 and 19, I think we will be upping our targets. So yes, at this point of time, it's a hold from our side.
Okay. Krishnan, yours 233, the credit cost provisions divided by NPAs has also gone down.
So I think for the full year, Lata, I think the bank had guided for 220 to 260. So I think most of the street is in that range is what I would imagine. So to that extent, 233 by itself is a good number, say a good print to have in the December quarter. But it's probably priced in terms of the trend, normalizing at least, right?
So okay, actually the stock is losing a bit.
Yeah.
Sorry.
I'll just point out one interesting factor. Now, what we flashed in terms of watch list is actually the funded watch list. So, funded watch list, which was at 6,052 crores in the previous quarter, has declined to 5,309 crore in the current quarter. That's a decline of 12% as mentioned by the management. So, in absolute value, if you see, the decline is about 743 crores. You take up the non-watch list, non-funded watch list, sorry. non-funded watch list in the previous quarter was at about 1100 crores. So you have some improvement there also. So largely of this 4,400 crores, my sense is that you look at these numbers, the major portion of slippages must have come from non-watch list slippages. Out of this, the movement in gross NPA also, if you check, Lata, while the fact is that they have 4,008 crore of recovery and upgrades, there is about 2,800 crore of write-off. So that is another niggling worry, that if they have write-off, they have to make provisions later on in terms of making up for that.
Usually for write-offs, they would have provided only when you are allowed to write off.
100%. And so therefore, despite that, 2,800 is a write-off. So that is how you are seeing an improvement in the overall gross NPA. It's not that the gross NPA is improved only by low slippages, but it has also
because of
a higher write-off that they have taken in the current quarter.
I would think, okay, is that an unusually high write-off? I mean, obviously old loans have to be written off. How long can you keep it on the books? Okay, I just want a final word on, I think all the data is with our guests as well. So Manish, any price target?
So we have a buy rating on stock with a target price of 680 rupees.
Oh, that's a tall price target. Krishnan?
So we have been constructive on the stock, Lata. I think we'll probably have to revisit some of these numbers, but we have been broadly constructive on on this one as well as other corporate changes. Yeah.
Oh, you are constructive. So positive. Mayuresh, I think your price target is exactly where it is now.
Around 620, 625, Lata. But again, I think I was constructive, and we'll have a look at the numbers, and we might revisit our earnings estimates and the targets as well.
All right. Gentlemen, thank you very much for joining me. Abhishek, you have the last word since you have the presentation in front of you.
Nothing. The performance overall is quite happening. I mean, it is in line. The slippages across analysts, they were expecting about 4,000 to 4,300 crores. We have IDFC Securities, which was expecting around 4,300 crores. So slippages have largely been in line. The only niggling issue is the falling names. Despite the fact that your loan growth is at 21% on a YOY basis, your operating profit in terms of the PNL is down about 17% on a YOY basis. That's a niggling worry, but apart from that, if you look at the asset quality picture, it's actually much better than what anyone had anticipated.
Okay, but actually for 9-month period, the NIMs are 3.48. I think it was 3.5 last quarter. So
this quarter they raised money. So cost of funds should have declined.
Okay,
that is the point.
Well, yeah. Over to you, Prashant.
I think running out of time, but I think that's the Axis Bank commentary. Havells numbers that also come out, and what we